know I try to be a good man. I always give it my best. But truth be told, someday I want to go to the wild, wild west.
And now, live from our Smokehouse studio, it's time for Real Estate Jerky with flavor you can't put down. Your real estate questions answered right now with your host, Edward Ed Parco, MBA veteran and president of Lending for Living, with weekly guests from all over the country and every aspect of life skills you need to build personal wealth through home ownership. Plenty to chew on, starting now.
Hey, it's great to be here today. Good afternoon to everybody. I'm here with two special guests today. I have Betsy Hirsch Younger again here. She's from Century 21 Wildwood from Tuolumne County. How you doing, Betsy?
I'm doing great.
All
Thank
right.
you.
And then we have a excellent cyclist who's here, who's also a great estate planning attorney in town of Modesto. And it's Mark Jensen of Jensen & Jensen Attorneys. How you doing, Mark?
Doing great. Thanks for having me.
Well, thanks for being here. So today's show, we're really going to be talking about real estate, and we'll be talking about local, also up in the foothills and the mountains, but really about what you should do once you get the property and how you should look at for your life estate, whether you're going to have a will or trust, what you should do, because you want to protect it once you have it, because if you don't protect it, someone might take it from you. So our special guest, Mark, will bring all that knowledge for us, experience. I don't know about a great attitude, but I'm sure he'll have a subject. He'll know a lot about what's going on. And Betsy has known real estate. She's been in it longer than I've been doing it, so she has a lot of knowledge. So let's get moving. So, Betsy, last week we had Michelle on the show, which she was really good about the whole tax planning. How'd you like the show?
I thought the show and the topic were great. I came back for this week because I think this is a topic that's important to everyone.
I think so, very much so.
We need to learn and educate people on this topic as young as possible.
About, what to do.
Mm-hmm.
Yes, I think so. So, Betsy, I appreciate you coming down. And we'll get into your real estate stuff later in the show, but let's start asking Mark some questions about what's going on. Mark, where were you born?
Right here in Modesto. I haven't got too far. 58 years, one town.
Well, I'm sure you've went other places, though, right?
Went away to school. That's about the size of it.
Where'd you go to school?
Went to UC Santa Cruz in Santa Cruz and went to law school in McGeorge in Sacramento.
Wow. So have you always wanted to be an attorney?
Well, my dad's an attorney and we're partners. And so when I was a little kid, I wanted to be an attorney just like my dad. And then I became a teenager and I wanted nothing to do with my dad. And I was going to do something completely different. And then one thing led to another. And the next thing I knew, I was getting married. I was going to law school. And then I've been partners with him for the last 31, going on 32 years.
Well, congratulations.
Thank you.
Not a lot of firms can say that, right?
That's true. Well, I got to give him credit for it, too, because he's been great to be a partner with. And we've never had any disagreements. It's been an excellent experience for both of us.
So that's unusual for father and son, right? Not having any issues.
Yeah, I am.
Hey, I'm just experienced.
It's true. It's true. And like I said, I attribute a lot of it to him. I have a daughter that's in law school now, and I'm hoping that maybe one day she might come back here and practice with us, and I hope I can be as good as he was.
I'm sure you will, because you worry about it. Any questions there, Betsy, before I get going anymore?
No.
You're always so quiet.
I am not.
You got to talk up. Come on. I'm sure you got stuff to ask. Now, besides the attorney stuff, I know you from Ride for Mom, and we had Bob on here a few weeks ago. And how's that going for you this year?
Ride for Mom's looking great. We're hoping the weather will be good. We have good registrations. I think there's a lot of interest. We have Doctors Medical Center being our primary sponsor again this year, and the committee's working hard. In fact, we have another meeting tomorrow night. So we have high hopes for another good year.
Good.
We were talking about what kind of bikes you had to ride, whether or not they had to be cruisers or skinny tires.
Well, it just depends on what you're riding, right?
Yeah, it's open to all. It's a family event. We have a 10-mile course, a 35-mile course, and a 77-mile course. So we get everything from road racers riding bikes like you see in the Tour de France to people riding cruiser bikes with their kids. So everybody's welcome.
That's correct.
Sounds like a great event.
So let's get into some questions about regarding trusts and that kind of stuff. First, when did you get into estate planning? Has it been something you always did when you first started, or?
Yeah, that was, as I say, I joined my father's practice, and he was already heavily emphasizing estate planning, trust, probate, and so it was natural for me to get into that area. So I've been essentially doing it steadily the whole time. I don't even know how many wills and trusts I've written. It's a lot.
And it's important.
It's an important thing to do for virtually everyone. And we've always thought it was the kind of legal services that people should be doing. Doing the planning is usually more efficient, cheaper, and better than trying to clean up after someone didn't do the planning and then something has to be corrected or straightened out or what have you.
Because it's much easier to fix it the first time than to fix it afterwards.
Oh, absolutely. And you're ahead of the game by having it planned out. I mean, a lot of people think, oh, well, I'm just getting started in life. I don't need a will because I don't have huge amounts of assets. But a lot of those people do need a will because maybe they're married, maybe they have some children. They need to nominate guardians. They need to provide for somebody to watch out for their assets. There's a need for estate planning for basically just about everybody.
In all aspects of their life, is that what you're saying?
Yeah, I mean, and you have to keep it fresh as you go. We recommend that people revisit the subject every 5 to 7 years just to make sure that there haven't been some life changes that necessitate a modification to the plan.
Yeah, because I mean, one of the things I do is I help people get homes all the time with doing their financing, and the first thing I want them to do is go talk to a trust person and make sure that everything's set up properly for them, so that there is no issues if something happens down the road.
Yeah, absolutely, and with most people or many people, their home is one of their most important assets, and it bears some effort to make sure that everything happens correctly if something something unpredicted happened.
Because you never know.
You never know.
Don't you find that a lot of the times lenders want them to take it into their name first and have it recorded as the name of the purchaser and then record it into a trust?
Yes, and I mean, it's been changing a lot lately where they allow it to be in the trust as long as they have the trust up front and they can read it and know what's going on in the trust. Or if it was in the trust already, then it's easier to keep it in the trust.
Right.
Because if someone does that, right, so if somebody records a property, they buy it, and they have a trust, and then they add it to the trust, does that make a difference?
From a legal point of view, no. We do experience that, what Betsy's asking about with the lenders, and it just seems to depend on what lender you're talking about. I think there's some law back east, maybe in some of the states back in that area where there's certain questions whether the individual people are bound by the loan if the property's in the trust and the loan's in the trust name, and those lenders that are working in states like that would sometimes prefer to have the property be individually owned by the people when they put the loan on, so there's no question that those people are individually on the hook for the loan. That isn't our law here in California, so it really makes no difference. And so if you're dealing with a California-based lender, a lot of times it won't matter at all. It's something that we have to pay attention to, though. The one thing that can go haywire is if someone's going to refinance their home, their lender asks them to take the property out of the trust to do the loan, then that next step has to be done to put it back in the trust so they don't pass away with the property outside of the trust. And that can be a problem for people because then the trust is not working to avoid the probate, and suddenly they're like, what? My loved one passed away and now I have to do a probate on the house just because they refinanced it?
Yeah, because trusts don't have written in there that it's in a boilerplate that after you establish your trust and you purchase property, it doesn't automatically go into your trust just because you own it. You have to actually put it in the trust name.
That's right. You can't put it in the trust. You have to physically move that property into the trust, and particularly if it's after acquired property. So that's an important thing to pay attention to if you have a trust.
And a lot of people forget to do that.
Right. And let's bring this up when we get back. We got to go for a break. All right. We'll be right back with Mark Jensen of Jensen & Jensen Attorneys in Modesto. And we'll go more into wills and trust, living trust. And Betsy Hurst will be talking about real estate. And we can take your comments and call us at pound 250. Say the keyword real estate jerky. Again, that's pound 250 from your mobile phone. Say the key phrase real estate jerky. And we'll talk to you when we get back.
I was waiting for you to ask me about when my first experience in estate planning was.
I asked him.
I know.
Do you want? And
No camera today?
Mark, did you like the blue oyster cult? No, I didn't have a sheet this morning. No.
All right.
Do you like the blue oyster cult music?
Yeah, that's very 70s and reminiscent of my high school days. Don't Fear the Reaper. More cowbell.
That's right. Saturday Night Live.
Yeah. It's a little aging. We're dating ourselves that we even know that
Okay,
one.
12 minutes on this one.
Yeah. Give me a second. All right. So where do I come back in? All right. All right. Okay. 12 minutes on this one.
Real Estate Jerky is back on Power Talk 1360. Chew on that.
That's right. We're back, and we're here with Mark from Jensen & Jensen in Modesto. And we're going over estate planning, and here we go. How many years have you been working with people doing their estate planning, Mark?
31 going on 32.
Wow. Did you know statistics are staggering for the number of Americans who don't have a will? AARP estimates over 50% of Americans don't have a will or trust. And, you know, I've heard there's so many stories out there of people not having trust and what has happened. So why do you think people don't want to deal with drawing up a will?
I've constantly wondered that. My theory on it, I don't have any empirical data, but humans in general are procrastinators, and that's one of those things that's easy to procrastinate on because most of us, we know intellectually that we're going to pass away someday. We just know it's probably not going to be tomorrow, and so people easily put that off. I've had some experience with people who actually have a fear, whether it's rational, it's not necessarily rational, but they think that if they do that plan, they're inviting, karma to punch their ticket. It's weird because, sometimes people will call and say, hey, I'm taking a trip to Europe next week and I would like to get my estate planned. Well, that doesn't give us enough time to get the work done, so that they have sometimes a trip or something will motivate a person to do it, but it's weird. It's psychology. It's human behavior. I don't know. I've been wondering at some point, are we going to finish getting wills and trusts for everybody so I'll be out of business? But so far, business hasn't slowed down.
Well, it's got, and like you said, you relook at them every so many years so that you have to make sure they're current.
True.
Hey, Betsy, when was the first time you experienced estate planning?
Well, back in 2005, I found myself owning several pieces of property with 3 children under age 18. And I went and set up a trust, which included a will. And it was interesting. I had to actually try and figure out who was going to be able to take care of my children, who was going to be able to pull the plug or keep me plugged in if for some reason I was on life support. And that could be another reason why people procrastinate, because that's a hard thing to think of, especially when you have young children. But I'd set it up, and I had to make changes when I got remarried, and so that was updated. But I've recently refinanced a piece of property and have not yet put it into the trust. So,
well, there's
Yes.
first thing you need to do tomorrow.
Exactly.
Call your attorney.
Well, no, you actually just have to contact the title company.
When's the last time you had your trust reviewed?
Back when I got remarried in 2006.
So it's time to go talk
time
to your
to do that
attorney,
again.
isn't it?
Yes, exactly.
Is there anything to add, Mark?
I would say, Yeah, 2006 to now, 13 years. Yeah, you're probably overdue for a review.
Yeah, I lost all the properties that were in the first trust, so
Yeah, but everything's changed. You got other properties now. Yeah.
I do.
Yeah. So you want to make sure they're protected.
Exactly.
Yeah. Because I know when my wife and I got together, we had a prenup. We had,
Right.
a will, a trust. We did all that when we first got together because, what was hers, and what's mine is mine. So
Right.
let's make sure there's no issues. And now it doesn't matter anymore.
Yeah.
Right.
Right.
And if you do have a prenup and then it doesn't matter anymore, do you have to go back to your will or trust and have that taken out, or do you just rip it up?
Well, if you have a prenuptial agreement, essentially the purpose of that agreement is to do what you just said. Make sure yours is yours and your wife's is hers. And if there's a later dissolution of the marriage, you can each walk away with what you started with. And so that agreement allows you the freedom to maintain that separation, but it doesn't create any restriction on you from not maintaining that separation. So really, if you want to change the program, you don't necessarily even have to rip up the prenuptial agreement. You just need to start changing the titles on the assets or get rid of your separate trusts and make one joint trust. In other words, you can undo the effects of the prenuptial agreement just by changing how your estate plan is set up and how you're holding title to your assets.
Well, and once your children grow up and they're over age 18, a lot of the parts of the trust that I had actually wasn't in effect anymore. I didn't need a guardian. I didn't need to try and figure out who was going to allow my children to have certain amounts of money. In my case, I went ahead and made it so the kids really didn't hardly get anything until they were 30. So I knew they were already through college, established themselves, and then got mom's help.
Hopefully these days.
And now
a little
it's
different.
completely different.
Well, I'm talking about the kids these days.
Yeah.
Sometimes it takes till they're 30 just to get them out of the house anymore.
I was 31.
Did you want to ask Mark any questions?
Well,
before I just take over the whole thing.
Well, I was just wondering, can you explain the difference between a revocable and irrevocable trust?
Sure. I mean, the name of the trust tells you a lot of the difference. The revocable trust is revocable because the person who set up the trust, who is sometimes referred to as the settlor or the trustor or the grantor, in essence, whoever set it up, they would retain the power to revoke, change, or amend that trust. In an irrevocable trust, which we're not using those every day because in those cases, the trustors are not retaining the power to change the trust. So modifying the trust is a much more difficult process at that point. And for that reason, we're more careful about when and why we would set up a trust that is, that can't be changed.
And the people that could change it would be the people getting whatever in the trust on one of those. That's who can make the changes, or
well, on an irrevocable trust, the law actually is that it can be modified with basically with the help of the court, provided that the people who set up the trust and the people who are the beneficiaries of the trust are all in agreement on that. So you have to have an agreement with your beneficiaries. So it's not just who put the money in, it's who has the benefit of that money too. And, in the right case, that's not a problem if you got a family that's getting along. But if they're not seeing eye to eye on things, all of a sudden somebody wants to do something, somebody else doesn't agree with it, and now we can't change it.
so basically, do you do those a lot or not really?
Irrevocable trust?
Yeah.
Well, there are uses for them. Like a common use of an irrevocable trust is an irrevocable life insurance trust, which we don't do them as much anymore now that our estate tax exemptions are so high. They're $11.4 million per person. So between a married couple, they can leave $22.8 million down to their children or whomever else they want without paying any estate tax. But back when our exemptions were much smaller, life insurance was a way that a lot of families provided cash for their children or other beneficiaries to pay or help pay the estate tax. And so the irrevocable life insurance trust was commonly used back at that time to set up a life insurance policy that would be outside the donor's estate, but yet available to the kids to pay the proceeds. So that would be one common use. Another situation where a revocable trust could become irrevocable. So like, let's say I set up a trust for the benefit of my 7-year-old son. that says, like Betsy was saying, that he can't have the money until he's 30, and meanwhile my sister-in-law is going to be the trustee for him. If I then die, now my trust, which was revocable by me while I was alive, has now become irrevocable by the fact that I died, and the person who was holding the power to revoke, change, or amend it has now died. So that trust is then locked in. So that's another common way where you wind up with an irrevocable trust. It's just a revocable trust converts to an irrevocable trust because of an event.
Wow.
So yeah, you're talking to an attorney
I know.
here,
It's
so
like-
you ask a short question,
No,
and
it's
you get a
perfect.
long answer.
I'm just trying to wake all of our listeners back up. Because, that's the one thing about this when nobody wants to talk about it. It has to do with attorneys. It has to do with a lot of stuff they don't want to talk about. And someone said, everybody wants to go to heaven, but nobody ever wants to die. Right?
Exactly.
So what are you going to do?
And this stuff's, you start peeling back the layers of the onion, and it gets kind of complicated.
And people don't want to, again, I think it was Betsy said, people want to look at the fact that everything that happens to them, who's going to take care of that for them? When you need to know all this stuff so that the last minute people aren't scrambling, families aren't not knowing what mom wanted in her life, or if she wants to they disconnected then or keep her alive, whatever. So let's ask those questions. A healthcare directive.
Yeah, that's a very important document and something I believe that most people ought to consider setting up. Like Betsy said, it's called an advanced healthcare directive. And in the document, the thrust of the document is to appoint another person to make medical decisions for you if you can't make them yourself. And it's not just pulling the plug, it's authorizing a surgery or saying, yes, my father is in a coma right now, but give him the brain surgery or whatever he needs to bring him back, or so it's all medical decisions. And then normally you would have, so if you're married, oftentimes you would have your spouse as your primary agent, and then one or more of your children or someone else to make those decisions if your spouse is unable to do it. So you can name, backup people in there too, which is also prudent.
Now, if somebody has a will, but they don't have a trust, does a will tell everything, or do you still have to go to court and probate if you just have a will?
So yeah, if you just have a will and your assets are more than the statutory level, which is $150,000, which in this day and age is
very easy.
It's easy to get over that limit because it's not only is it $150,000, it's $150,000 of gross value, not net. So if you have a $250,000 house with a $200,000 mortgage, you're still going through probate because you've got $250,000 in gross value. Right. And then the only other, you can leave whatever you want to your spouse without going through probate. So even with just a will, if your will says I'm leaving everything to my wife or husband, you can do that with no probate, even with a will. But otherwise, you got more than $150,000 worth of assets. Your will is effective to make sure who you say gets your stuff gets it, but it's got to go through the probate process to do it.
So does the will have to be recorded? Does it have to be actually done by an attorney, or can it be handwritten?
Can we finish it up when we come back? Can we answer that question again when we come back from
Sure.
our break? All right.
Yeah, no problem.
Hey, being a veteran myself, I think it's important to support our military family members, as we always like to honor veterans, business owners during the show. If you know a vet that could use some free advertising, please message us their name and their phone number. You can do that on Facebook or through Twitter, any of those things. Call us at pound 250. That's pound 250. You say the keyword real estate jerky, and we'll take it from there. I want to give a shout out this week to Kyle Helton of Drain Masters Plumbing, serving Stanislaus and San Joaquin County. You can call 209-594-2074. We'll be right back. How's this in?
This is blood, sweat, and tears.
I know it is. This is really old. This is before.
I love that song.
We're going to get Cat Scratch Fever next. Ted Nugent.
So which part are we on now?
You're bringing us back. Yeah, I've just been going all over because of how the thing's been flowing.
I know. Like you're
This is kind of, it's there, but you don't have to follow it 100%.
He told me to make sure I did my homework.
But next one will be 11.
And then he felt
Then he
free to
skips
ignore
around.
it. Same
No,
thing
there's
he's going to
nothing-
do with this prenup. Drive free to ignore that thing.
No, because now we sold the other house, right? And now we're living in my house.
Well, now
and we
you're
put that
20 years
money
down the line
yeah,
or whatever.
15.
Yeah.
So we just need to fix everything. Plus, all of our kids are going to be out. So Blake turned 18 yesterday, so now
Wow,
everything
really?
has to change. Yeah, Blake.
Oh, he was just a little pipsqueak.
Well, it's amazing how fast he grew from 14 to 18. I mean, that was 3. I mean, when he went 7, it was like, he's huge.
And he thinks that means that he's going to get out. My daughter lived with me for the last 6.5 years with my 2 grandkids. That's why he knows.
God, we parallel. Yeah.
Us, I know.
Did you? Are we good?
Yeah.
Or I thought maybe you had something to tell us.
I'm just listening.
Okay. And then bring it up. Just go into what you asked that question again, and then go into
Handwritten wills versus.
yeah. Just
recorded.
say, hey, we were before the break. After you do the little
Yeah.
thing.
Real Estate Jerky is back on Power Talk 1360. Chew on that.
Hey, we're back talking to Mark Jensen, attorney with Jensen & Jensen here in Modesto. So, Mark, before we took that break, I was asking whether or not handwritten wills versus recorded wills or wills made up by attorneys all can be used. Are they effective, or is there one specific way they have to be done?
Well, there's some law on that subject. It is possible to do a handwritten will. The basic requirements to do it is that the will has to be completely, all of the dispositive provisions of the will have to be completely written out in the handwriting of the testator, the person making the will, and it has to be signed by that person and it has to be dated. Obviously, that's not my recommendation of the best way to do a will. There's a lot of ways you can make mistakes in that process. If you're going to have a typewritten will prepared by an attorney or someone else, the will has to be signed by the testator in the presence of 2 independent people who are there at the time the testator signs it, and they sign their name to it and aver to the fact that the person knows what they're doing and that they're over the age of 18 and they don't appear to be acting under undue influence and fraud. So they have to sign a witness statement and see that person sign it, and then it also has to be dated.
So does that have to be notarized or just witnessed?
Just witnessed.
Okay. So that was a really long answer there.
I know. I was going to say to
I'm
that
still
short
stuck
question.
on that first word.
I
he
could have said yes.
Well, you just want to be sure that you're giving the legalese so people know that, right? I mean, that's what you're an attorney, so you want to make sure you say it out there right. And
Correct. I want to give a complete answer to the question because I don't want somebody getting
so
the
be
wrong
careful what
idea.
you ask there, Betsy.
Yeah. Well, a few years ago, my stepfather had a stroke, and then 2 months later, another stroke, and had told me, "Oh, I have all this stuff ready for you. Everything's, in order." Well, no, there was a handwritten, unlined piece of paper with no witnesses, things like that. But luckily, I was the power of attorney, and I've been able to help him take care of his finances for the last 3 years while he's been in long-term care. And but there's a lot of people that don't have wills and trusts out there, and if they don't have an attorney, and what if they're parents of young children, what do they do in that case?
It's a problem if, fortunately, over the life of my practice, I haven't had a lot of young people passing away with minor children, thank goodness. But if they do and they have no estate plan figured out, you're leaving the process in the hands of the courts, number one. And then also in the hands of whoever's going to be driving the court process. So you can end up having, in-laws fighting with one another over who's going to be the guardian for your children, people disagreeing on how to administer the assets for the benefit of the kids. For sure you're going to probate. For sure you're going to have an actual judicial guardianship proceeding. It's going to greatly complicate the process. The outcome's going to be less certain, and it's going to cost more.
So any real life stories you can share with us? What's the worst case scenario, or what's the...
Well, I mean, in a recent case, we had a probate that we did where an individual had passed away with a sizable amounts of assets and no will, no trust, no planning of any sort. The person was unmarried and had no children. So that put us to the job. Oh, and the additional complicating factor was both of his parents had passed away years prior, and he had not transferred a lot of the assets out of their name and into his own name. So we ended up with having to do work on the parents' probates, on his probates. The beneficiaries were a host of, I think it was a group of maybe 25 or 30 people spread out all over the world. We had a difficult time finding everyone that was the beneficiaries, and the cost was much, much greater than had this gentleman just gone and paid someone to do a living trust or even a will.
So how did they know the beneficiaries?
Well, the probate code, the California law, provides a list of beneficiaries for that circumstance. It's called their intestate heirs. In other words, who the government says your heirs are if you don't leave a will or an estate plan. And so the rule is basically it's relatives. So it goes up to your parents if they're alive where his parents were gone. Then it went down to siblings, nephews, nieces, and so on. He had no siblings, no nephews and nieces. So it goes
Did he have a
back up.
dog?
It goes up to grandparents, and then it was out to cousins
Wow.
and down
Okay.
the aunts, uncles, cousins, and down that line. So, we had to talk to a lot of people to compile the list of all the beneficiaries.
And then a lot of costs ate up a lot of the.
It ate up quite a bit of money and took quite a bit of time to accomplish all of that. And it was kind of unnecessary. And of course, no one actually knows, had this guy given the matter some thought, if he would have left his estate to those very people, or would he have left it to elsewhere, or to a charity, or to his next door neighbor, or to his dog. You can't do a trust for a pet.
You can or can't?
You can. It's
Well, they
legal
do
now.
them, right? A lot.
It's legal, yeah. It's actually in the law.
Well, they do them for a charity also, right?
Yeah, you can leave money to a charity outright or in trust or with conditions and so on. And quite a few people have charitable intent.
Right.
Right. And I had a situation where I had a gentleman buying a house from his father, and they were going through the process, and it was a short sale, and they actually had him sign all the documents. The father signed all the documents. 2 days later, he passed away. And the only way they were able to get that done is because they knew they had everything signed, right? The contract, everything, all escrow instructions, everything was signed saying that this is what he wanted. Right, so that's legal, right? Because as long as you keep it the same, right, don't make any changes.
Yeah, if you have a binding agreement to sell a piece of property, it's binding on you even if you pass away before it's completed.
Unless something changes in the terms of it, right?
Yeah, unless somebody wants to change the deal. Well, you're not there to agree anymore, so they either do the deal the way it was or they don't do it.
Right.
I had something like that, but the seller had a trust, and the son, who was an attorney, was the trustee, and he was the one that actually got to take it from there after father passed away.
Did he keep it?
It's a
Or
short,
did-
it's a short sale
Oh,
for sale
okay.
right now.
No.
So no.
No. Okay. So I asked this before we came to the show. I think before we started, we were asking questions, and I have a lot of clients who they'll do a sole and separate property when they're married, and they'll keep it from the spouse, or they have a property that they had before they got married, but then they got married, and they said that's my sole and separate property. But we live in California, which is community property state. So if I just have sole and separate on a deed, it does not mean that that's sole and separate, correct?
Not just because that's on the deed. You'd have to dig into it deeper to find out if it's separate property or not. The best way, first of all, what you bring to the marriage is your separate property, provided you keep it separate. Also, if you inherit or receive property as a gift during the marriage, it's separate property as long as you keep it separate. So those are some principles of law that are applicable. If you're going to just acquire a piece of property while you're married and you want to keep it separate, the best solution to that issue is to have your spouse sign and agree that it's your separate property, because the law does allow spouses to agree on what the character of property is. And most of your lenders, most of your title companies are going to require that. So if you go down, you're married, you go down to a title company, you're buying a piece of property, and you tell the title company, I want it in my sole and separate property, they'll say, great. We're going to prepare a second deed for your spouse to sign saying they agree to it.
And so if they do sign that, then it's sole and separate?
That's right.
Okay. That's the question, because they always have you sign a grant deed or whatever that's that way, that it's your sole and separate property. Then, so if you live in the house and they say it's sole and separate property, is it still sole and separate property?
If it's agreed to between the spouses
So if that-
and it's
if that
in
grant
writing,
deed-
that grant deed holds up. Yeah.
Wow.
Wouldn't that spouse that's not the owner, have to sign a quitclaim?
Yeah.
Yeah.
Yeah, that's what they do. They make them sign a interspousal quitclaim deed, basically saying they don't claim a community property interest in it. Now, if you get into a divorce later, there can be showings made to undo some of that if depending on what happened.
Like we only did it because I couldn't qualify on the loan.
Yeah, or I signed it because I couldn't qualify in the loan, but then I used my salary to make the payments and yada yada. And so sometimes there can be some backsliding on that kind of stuff.
So if you do that, then put it in the trust right away.
Yeah, I mean,
Right.
yeah, for sure, and make sure that if it's really separate property, it's really separate property. I mean, sometimes people want to call it separate property, even though it really isn't separate property. My wife and I are buying a piece of property. I'm just put it in my name as my separate property. So when we go to sell it, only I have to sign it. But everything else says it's community property. They're using community property assets to make the payment, the mortgage payment, the down payment, the taxes, yada yada. My advice to clients is keep separate property. Make sure it's really separate property before you even go down that road, and then make sure you've got it documented right.
Okay. Hey, Bets, why don't you take us to the break?
Yeah, thank you for listening to Real Estate Jerky. We'll be right back after this break. I'm Betsy Hurst Younger, realtor with Century 21 Wildwood and Twain Hart, visiting Ed today. I'll share some of my great mountain properties with you when we come back. Is that leader of the pack?
I don't know. I don't know what that is. Is that leader of the
I
pack?
can hear it faintly.
No.
You couldn't hear it?
I don't know the song. All right, so we got about probably 11 and some.
So those 10-minute segments go by quick. Huh?
Yeah, they do,
I must
yeah.
be talking too long.
No, you're perfect.
Am I doing okay?
You're doing great.
I'm learning stuff.
Yeah, that's all that matters. That's what it's about.
Well, this
So
stuff is
Boring.
I
well.
recently...
This is the kind of stuff I talk about all the time. It's not you're not throwing me questions that I don't. I mean, if you do
Not
throw
yet.
me one I don't know, I'm going to just tell you I don't.
I don't know. I'll
Okay.
find out for you. Cool.
I recently had someone call me. Their father had passed, no will, no trust, and the bank took back the property and
What?
sold it under foreclosure. Yeah,
Well, they must have waited around for some
that's
time.
what. Well, they said they tried to notify him, but the errors they didn't know, so they didn't get anything. And obviously, no one was opening his mail. That's what I'm thinking.
Yeah.
So they sold it for more than what he owed,
Yeah.
like
okay.
45,000 more.
So they get that money.
Yeah.
They're
So,
entitled to
but
it.
they've got to prove somehow that they're the heirs.
Mm-hmm. Yeah. So there's a process they can go through to claim that, but they're entitled to it.
The day,
Hey, that should be on the show.
Yeah, that's interesting stuff.
the day
yeah.
it recorded, he had a third party call him. Hey, I can get that money for you for only 20%.
Oh yeah, they don't need to pay that. That's a rip-off.
All right, so we're going to have 10 minutes.
And I'm going to say the addresses of the listings.
Well, you just, or not, whatever you want. I got this cute little
Yeah.
thing up in the blah, blah, blah. Yeah.
Okay, you ready?
If they're your listing, say the addresses.
Okay.
Leaving the bull behind. It's Real Estate Jerky.
Hey, this is Ed Parco, mortgage advisor at Lending for Living. I'm here with one of my good friends, Betsy Hurst Younger from Century 21 up in Wildwood in Tuolumne County. Life is good in the mountains, right, Betsy?
It's very good this week.
All right. How about you share some of your great properties that people should live and like to work in or live with or whatever?
We know a lot of people that come up from this area and from the Bay Area prefer to have homes on acreage. And I've got several homes on acreage that are available right now. One particular has an elevator, 4,400 square feet. It's in a neighborhood called Ridgewood at 16411 Crest Ridge Avenue, 360-degree views on almost 5 acres.
Wow.
Another one is on a secluded 2-parcel, 13.09 acre piece of property. It has a large shop and a 4-bedroom house that they use for Airbnb, so it currently has income at $474,900, so $474,900. and that address is 24530 Tramway Road, Twain Harte. Another one is a private setting with a 2.37 acre parcel that is a newer home at 22980 Frediani Way in Twain Harte. And by newer, I mean built in the 90s, because a lot of the homes in Twain Harte were built in the 20s and 40s. So those homes. And then within the last week, Ed, you and I closed an escrow for a first-time home buyer that actually went to school with my kids in elementary school. And I want to thank you for that. They're super happy.
No, thank you. I really enjoyed the hug she gave me when I told her
I
you were
know.
on record. First, she looked at me when I was walking in to tell her, she like, what happened? What's
She thought
wrong?
something was
Why
wrong.
are you here? I'm like, congratulations, you're on record. You own it. And she was so happy. It's first-time home buyers, their first house. It's like there's nothing else like that.
Well, and it's also nice being up in that area because it is a small town, and you'll run into her again, and I'll probably see her in the grocery store, and she and her husband are having a baby in July, so I'm sure we'll hear about that too.
Yeah, and what's nice about up there is there's USDA where you can do 100% financing. Where, down here we don't have that in a lot of areas. It's Riverbank and Oakdale we have, but up there it's all over. It just depends on what your debt to income ratio is.
Right,
then
and our FHA limits are
higher
up there, where we can definitely find something that someone only has to put 3.5% down on.
Right, or you can do if it's a second home, 10% down. It's amazing what you can get up there. Looking to move, Mark? You need a second home?
No, I'm good. I'm good.
Hey, why don't you had a question for Mark during the break that you were talking to him, unless you had more stuff to talk
Oh,
about.
no, you know what? I was actually just telling him about what happened recently and how I heard about someone whose father had passed away, and they didn't have a will and they didn't have a trust, and the house actually got foreclosed on. The lender received $45,000 above the price of what the loan, or the part of what the loan was. So there were actually proceeds. And the day it recorded, a third party called that. Somehow they found out who the kids were, who the heirs were, called them and offered to recover that money for them for 20%.
Yeah,
That's better than nothing.
Yeah, but that's excessive. I mean, they're entitled to that money. They should probably just obtain an attorney to help them get those funds from the lender. The lender has to pay it over to them.
The lender isn't talking to them because they don't have authorization to speak with them.
They just need to get an attorney.
Yeah, they need to get
They'll
an
talk to an
attorney
attorney.
Yeah. The other thing I would say is that don't sit around and let everything happen to you if a loved one passed away. I know you're grieving. I know that you don't want to deal with it, but that whole scenario is probably preventable. For example, the law allows them to continue to make the mortgage payments on the house. Mm-hmm. They didn't have to let it go to foreclosure. If they would open the mail, they would have gotten notice of the foreclosure. As you guys know, the foreclosure process takes about 4 months to do, start to finish. There was a lot of things going on there that really were avoidable if they had had the right advice. So get advice, take some action. Don't just sit around and wait for the bad news, because if they sold it at a foreclosure sale for $45,000 over what it was, what that was lent, you got to figure it was worth more than that, or nobody would have paid it.
Right.
And there's notices taped on the door. There are foreclosure. You can't miss them. They're all over. There's so many notices they
I
get.
think it happened so quickly that it probably was going through that process while he was
living.
Well, yeah, maybe it had started while the dad was still alive.
That's kind of what I think.
Yeah. So, the first person that was sticking their head in the ground about it was the dad himself, possibly. But in any event, that's their money, and they don't have to pay somebody $9,000 to go get it.
They just have to prove that they're the heirs, and does it have to go through probate?
No, it's it's below the limit. We said before it was $150,000, so you can collect that with an affidavit. You do not have to go through probate on an asset that size.
Good to know.
But then they should get an attorney, because the lender won't talk to them because they say you don't have authorization from the.
Well, the lender's probably worried right now anyway that this process went through. They're probably worried whether the notices were sufficient or not.
Right.
They're probably worried that there's going to be a claim to set aside the foreclosure sale.
Right.
So they're clamming up.
Because they have a period of time where after a foreclosure, that somebody can come and get it transferred back, right?
Right. There's statutory periods to undo it, and so they should definitely go get an attorney that specializes in that kind of an area to get some advice and at least get the money.
I mean, because the foreclosures that happened in the past, most of the people who were buying those didn't matter that they could actually, someone could come back and say, I want that property back later. But now most people have equity, right, in their homes, and then they're getting foreclosed on. So they have to be worried if you're buying that property at a state's, at a sale, that somebody could come back and take it from you or ask for it back.
Right.
Absolutely.
Yeah, we're seeing just a few foreclosures up at the hill right now. A couple of short sales.
Yeah, we're not seeing a lot here, but they're still happening, though. I mean, you do see some notices in the paper. So
right.
No, we're below the levels of 2000. Back before that event happened, we're back to normal levels. Actually, below normal levels right now. So, which is good. We're finally here.
Nice.
We went through enough.
Yeah.
In this area.
That's right.
All right, so we have about 3 minutes left. We were talking earlier about what everybody should have, and we were talking about a will, a healthcare directive. What's a durable power of attorney?
That is a power of attorney where you authorize someone to make your financial decisions for you if you can't make them yourself. Again, most people would typically name spouse as primary and then maybe one of the kids or another family member as a backup. I think that's a good thing to have. Depending on your age, you can set it up too so it is what is called a springing power of attorney, so it's not effective right now, so that person you nominate can't go around and tap into your bank account right now. They can only do it if you become incapacitated or something. So in essence, it springs into effect when you get a doctor's note saying you're incapacitated.
Right.
So you could set it up like that for younger people. But if it's for, elderly folks or whatever, most of those, older people will just set it up so it's presently effective.
Gotcha.
And that also covers medical?
The medical is on the Advanced Healthcare Directive. It's similar, but the Advanced Healthcare Directive is just for medical and the Durable Power of Attorney is just for financial. So you'd really need both of those things. So in answer to your question, Ed, I would say the minimum most people should have at a minimum is a will, a healthcare directive, and probably a power of attorney.
And then, how much more is for a living trust? It can't be that much more to do that. If they're doing those other three already, because if you get a living trust, do you do the other three?
Yeah, usually you would do that as part of it. And if somebody wants to work on the probate avoidance, doing a living trust is a pretty much of a baseline kind of item too. And estate planning, depending on who you're going to or where you're going to get it done, I know it's more expensive in the Bay Area, for example, than it is down here, but it's not that expensive.
But the Bay Area is more expensive all over.
Yeah, you just pay more for everything up there. But even in their terms, it's still. Planning is the cheapest legal services you can buy.
Right. Otherwise, you're going to give it to the government. Right.
You're going to give it to the government, or you're going to give it to your lawyer later.
All right. So we have about 1 minute left. Is there anything you guys want to bring up?
Well, I was going to say if they're going to have a power of attorney and they own property, they should make sure the verbiage convey property is in that.
Yeah, for sure.
Well, I know that whenever we do a power of attorney for real estate, it's only for that specific transaction.
Oh, absolutely. You can do a power of attorney for a specific transaction too, and that's something that people do. Like if they're buying a house and meanwhile they're going to Europe for vacation, they can give someone a power of attorney to finish the deal for them.
Right, because they won't take a regular power of attorney to do real estate transactions, from what I've seen. So you got about 20 seconds. Got to say goodbye.
I'm going to say goodbye, and everybody have a great weekend.
Yeah, thanks for having me on.
Hey, Mark, we really appreciate you coming on today.
I appreciate it.
And all your knowledge is really important to have you here.
It was nice meeting you. Thank you.
Thank you very much.